Hello, Dr. Trader here. This week we are looking at gold. A pause in United States-Iran fighting pushed gold more than 1% higher during the session, reversing an earlier decline driven by expectations that the Fed could keep policy tighter for longer. At the same time, Brent crude fell more than 4% while gold rose. That divergence is worth noting, but the available data does not prove a direct flow of capital from oil into gold. Nexus keeps an overall bearish bias on gold this week, but conviction is low. Here is the sequence behind this week's move. Gold initially came under pressure as markets considered the possibility that the Fed could keep interest rates high for longer. The pause in United States-Iran fighting then triggered a reversal, pushing gold more than 1% higher during the session. Brent crude fell more than 4% at the same time. Gold rising while oil falls is a cross-market price divergence, not proof of capital rotation, because the source data contains no direct flow figures. As of Monday morning, July 27th, gold futures traded around $4,098.1. Price was testing weekly VWAP at $4,098.87 from underneath. It had not broken above that level. This is the central conflict in the thesis. Three major signals are pointing in different directions. First, Nexus multi-timeframe alignment is bearish across the board, and the structural rule engine also leans bearish. This is the strongest medium-term factor. Second, COT positioning leans strongly to the upside. However, the source brief does not provide the report week, release date, or the exact net position figure. This signal should therefore be treated as directional, not as a standalone statistic. Third, short-term price action is also bullish. Price at 4,098.1 is above the thesis snapshot close of 4,091.5, and it is sitting just below weekly VWAP. That disagreement is the reason conviction is low. It is not a failure of the analysis. Gold is currently trading around $4,098.1. Weekly VWAP is 4,098.87. Price is testing that level from underneath and has not broken above it. If price holds sustainably above weekly VWAP, short-term momentum would be moving against the bearish thesis. The response is to reduce position size, not necessarily to exit completely. Weekly TrendSL is much higher, at $4,467.85, more than $360 above the current price. A weekly close above that level would fully invalidate the bearish structure. That is the hard break condition. One source note matters here. Nexus consistently uses the COMEX gold futures contract, GC = F, as the proxy for the current quote, VWAP and TrendSL. This is not interbank spot gold, so a small basis difference versus spot can exist. Nexus keeps an overall bearish bias on gold this week, but conviction remains low. This is not a high-confidence sell signal. The bearish thesis is anchored by all bearish multi-timeframe alignment and a structural rule engine output that also leans lower. But that structure is being challenged by bullish COT positioning and bullish short-term price action, with price above the thesis snapshot close and close to weekly VWAP. If price holds sustainably above weekly VWAP at 4,098.87, reduce position size. That is a risk control signal, not a full exit. Only a weekly close above TrendSL at 4,467.85 would completely invalidate the bearish structure and require a full reassessment. Position size should reflect the low conviction and highly conflicted nature of this setup. These are the levels and events to monitor through the rest of the week. First, weekly VWAP at 4,098.87. Sustained price above this level would put short-term momentum against the bearish thesis and call for smaller positioning. Second, weekly TrendSL at 4,467.85. A weekly close above it would fully invalidate the bearish structure, although current price remains far below that threshold. The FOMC meets on July 28th and 29th. This is the main two-way event risk for the week. Developments in the United States-Iran pause also remain important. The pause could break down or develop into a more durable agreement, and that risk cannot yet be quantified. COMEX gold is also consolidating above the psychological $4,000 level. Finally, the United States 10-year real yield is 2.43%. In theory, that is a headwind for gold, but the related causal chain achieved only about 35.9% accuracy in the referenced backtest. The brief does not specify the sample size or test period, so this input receives a lower weight. To summarize, Nexus keeps a bearish bias on gold this week, but conviction is low. The multi-timeframe structure supports the bearish side, while bullish COT positioning and bullish short-term price action provide a direct counterweight. Price is testing weekly VWAP from underneath, just ahead of the Fed decision. Thank you for watching. This weekly analysis is built from the Nexus research engine at Intermarket Edge. Follow the channel for more gold and cross-market analysis. This content is for informational and educational purposes only. It is not financial advice.